Welcome to the Riffle, a podcast series by 10 Leaves. Today we're doing another deep dive, this time into some pretty major regulatory shifts happening in, well, one of the Middle East's most important financial hubs.
That's right. We're talking about the Abu Dhabi Global Market, the ADGM. It's a
Mm.
huge player, actually the largest international financial center in the Min-NA region.
And known for its familiar legal system, right? Common law-based,
Yeah,
plus top-tier infrastructure.
exactly. And it's growing fast. End of H1 2025, they clocked, 11,128 active licenses. Impressive numbers.
It really is. And that growth piece is key, isn't it? We saw that incredible 245% jump in assets under management AUMs back in 2024.
Yeah, and when you see growth like that, regulation almost has to adapt, to keep pace, maintain stability and confidence.
Makes sense. So the ADGM Registration Authority, the RA, they've basically rolled out a new playbook.
Pretty much. It's an enhanced regulatory framework officially. The Commercial Licensing Regulations Rules 2025. The goal, they say, is boosting transparency, efficiency, integrity.
Okay, so our mission today, yours and mine, is to unpack the big changes. We're focusing on what this means for legal folks, tax advisors, and company service providers. Specifically, the new rules you must meet to get or keep a license.
Right. It's all about shoring things up, making sure the ADGM framework is, future-proof, especially given its increasing global influence.
So setting the scene, these new rules dropped on October 16th, 2025. We're mainly looking at two key documents.
That's right. The main ones are the Conditions of License and Branch Registration Rules 2025 and the Controlled Activities Rules 2025. And importantly, these completely replace the old rules. They repeal the existing framework.
Repealed and replaced. Got it. Big picture, what are the main things the ADGM is trying to achieve with this overhaul, like the top-level goals?
Well, they've laid out four key objectives. First, big one, introducing tax services as a brand new controlled activity.
Okay, number one, tax gets regulated. What else?
Number two, they're raising the bar for getting a license if you want to offer legal or tax services. New requirements there.
Higher standards for entry. Makes sense. Third,
setting ongoing conditions. So it's not just about getting the license, it's about keeping it and meeting certain standards continuously.
right, continuous compliance. And the last one.
Finally, number four, they're enhancing governance standards, specifically for company service providers, CSPs. More rules on how they need to operate internally.
Now, a quick point for you listening, timing is important here. These rules hit new applicants immediately.
Correct. But for firms already licensed, the ADGM has set out transitional periods, so there's some time to adjust, but everyone needs to get aligned eventually.
Okay, let's dive into that first big change then. Tax services becoming a controlled activity. What does that actually mean in practice?
It's a fundamental shift. Before this, providing tax advice wasn't really a regulated activity under the ADGM's specific licensing rules. Now, if you're providing tax services by way of business, it officially is a controlled activity.
So it puts tax advisors on a similar regulatory footing to, say, financial firms or law firms.
Essentially, yes. They now fall under a specific set of conduct rules and licensing conditions.
And how wide is the net? What kind of tax services are we talking about? Is it just UAE tax?
No, it's broader than that, which is crucial for international firms. It covers two main areas. First, advice on taxes outside the UAE, so international tax planning, compliance advice for other jurisdictions, structuring, risk management.
Okay, so the international piece is definitely included. And the second area?
The second is advising on UAE tax matters. That includes helping with compliance, handling filings, general advisory, and even liaising with the local UAE tax authorities on behalf of clients.
Right, so they've bundled local and international advice together. It suggests they see competence across the board as essential.
I think that's fair. You can't just be good at one or the other if you want the license.
So if you want to be a licensed tax service provider, a TSP, what new hoops do you need to jump through regarding your team?
Okay, this is key. They're focusing on leadership quality. TSPs have to ensure that at least half, 50% of their senior management are suitably qualified professionals.
Senior management meaning directors, partners, managers.
Exactly, the people in charge. But just being qualified isn't enough. There's an experience threshold, too.
Ah, okay. What's the magic number?
Each of those qualified senior managers needs a minimum of 5 years of relevant post-qualification experience.
5 years. So they want people who've actually been doing this for a while, not just fresh out of their exams.
Precisely. It sets a clear benchmark for experience at the leadership level.
Beyond people, what about financial safeguards? Like insurance?
Yep. That's mandated too. TSPs need professional indemnity insurance, P&I, with minimum cover of $1 million for any single claim.
$1 million per claim. Standard baseline,
Yeah.
but important. And there are principles they need to follow, too.
Yes, 6 core principles are specified. They cover things like integrity, acting with due skill, care, and diligence.
Sort of the fundamentals of professional conduct.
Exactly. Plus confidentiality, transparency, managing conflicts of interest, and how they deal with the registrar of the RA itself. These aren't revolutionary concepts, but making TSPs formally adhere to them under the controlled activity rules is new.
Okay, so 5 years experience for senior tax folks. Let's pivot to the legal service providers, the LSPs. Given it's a common law system, is the bar set even higher for them?
It is, specifically at the very top. If you're applying for a legal services license, you need to appoint a managing partner or someone in an equivalent leadership role
Yes.
who has at least 8 years of relevant post-qualification experience.
8 years. That's quite a step up from the 5 for tax.
It is 3 extra years. It clearly signals the premium ADGM places on deep experience when it comes to overseeing legal practice within its jurisdiction.
You could argue, though, that demanding 8 years might exclude some really sharp, younger legal entrepreneurs. Is that a risk?
It's a potential trade-off? Maybe. But from the ADGM's view, I think they see it as essential for stability. They want firms led by people with really deep institutional knowledge, especially given the independent common law framework. It's about filtering for proven seniority.
Okay, 8 years for the boss.
Yeah.
Now, what about physical presence? Are they cracking down on firms that just have a mailbox address?
Oh, definitely. They're very clear on this. LSPs must have a registered office in the ADGM. That's standard. But the real change is this.
Go on.
They have to sponsor or get an ADGM work permit for no less than 1 full-time employee. And that employee needs to hold a recognized professional qualification and be in good standing with their professional body.
Okay, 1 qualified person full-time. Doesn't sound like a huge team, but what's the catch?
The catch, or the kicker, is that this person must be generally physically present in that ADGM office during normal business hours.
Ah. So no hiring someone who lives abroad and flies in occasionally. They need actual boots on the ground.
Exactly. It forces a real operational presence, someone physically there day to day. It's designed to prevent those brass plate setups.
That's a significant move for operational substance. And financially, LSPs also need that same $1 million P&I insurance per claim.
That's correct. The same $1 million minimum per claim. Plus, there's a new reporting requirement coming in.
Oh, what kind of reporting?
Starting in 2027, LSPs will have to submit an annual LSP return. It needs to cover things like the number of clients they have, the types of services they're offering, and details about their employees, their qualifications, experience, that sort of thing.
So the IRA isn't just checking applications anymore. They'll be monitoring ongoing activity and the profile of the firms each year.
Precisely. It adds a layer of continuous oversight. And of course, LSPs also have to comply with those same core principles of conduct we mentioned for TSPs: integrity, confidentiality, etc.
Okay, let's move to our third group. Company service providers, the CSPs. These are the firms handling corporate admin for lots of ADGM companies. What's changing for them?
For CSPs, the big focus seems to be on governance and financial resilience. First off, managing conflicts of interest is now mandatory. They must have formal policies and procedures in place.
So it's not just good practice anymore, it's a requirement.
Correct. And then there's a significant financial role.
Let me guess, capital requirements.
You got it. CSPs now have to maintain a minimum regulatory capital of $50,000 US. And crucially, this has to be in immediately available funds.
$50,000. That might not sound like a fortune in the grand scheme, but for a smaller admin-focused firm, that could be a real barrier, or at least a significant requirement.
It is. It's designed to ensure they have a financial cushion, funds available to cover potential issues, fines, maybe small client liabilities if something goes wrong. It definitely filters out firms operating on very tight margins with no buffer.
So it demands a certain level of financial substance. What about staffing for compliance roles, especially anti-money laundering, AML, which is critical for CSPs?
This is another major structural change for them. CSPs must now have a dedicated money laundering reporting officer, an MLRO, and a compliance officer.
Dedicated roles. Can one person do both?
Yes, the rules allow for flexibility there. One individual or even an outsourced provider could cover both roles. But, and this is key, whoever fills these roles must do so on a full-time basis, either a full-time employee or fully outsourced.
Okay.
And they have to be independent from other statutory roles within the CSP, like being a director.
So that really stops, say, a small two-person CSP from just having their director wear the MLRO hat part-time alongside everything else.
Exactly. It forces dedicated resources and independence for these critical compliance functions. It's a serious upgrade in expectation.
And are there training requirements to make sure staff know what they're doing?
Yes, mandatory annual certification or training for staff who deal either with the registrar or directly with clients.
What does that training cover?
It focuses on the practical stuff. Ethics, general compliance principles, specific AML and KYC, know your customer requirements, and importantly, how to correctly use the ADGM's online registry system. They need proof every year that relevant staff are up to speed.
Okay, annual training. Now let's loop back to insurance for CSPs. You mentioned it was slightly different.
Right, so like TSPs and LSPs, they need that minimum P&I cover of $1 million per single claim.
Okay, the same baseline. What's the difference?
The difference is the aggregate cover. CSPs must also have an aggregate annual cover of at least $1.5 million.
$1.5 million aggregate. Why the higher total cap for CSPs compared to lawyers or tax advisors?
Well, think about the potential scope of impact. A lawyer might make a mistake on one client's case. A tax advisor might give flawed advice to one company. But a CSP...
They handle admin for potentially hundreds of companies simultaneously.
Exactly. They manage corporate records, filings, maybe director services for many entities. So a systemic error on their part, say, a data breach affecting multiple clients, or a failure in their filing process, could lead to multiple claims adding up over the year. The higher aggregate limit reflects that potentially broader systemic risk profile.
That makes sense. It acknowledges the different nature of their role and potential liability. Okay, so stepping back, what's the big picture message from all these changes across tax, legal, and CSPs?
I think the message is undeniable. The ADGM is doubling down on quality, transparency, and integrity. They're raising the minimum standards across the board.
We're demanding more experience,
Yep, higher experience benchmarks, particularly in leadership.
more financial security,
Definitely, with the P&I requirements and that new capital floor for CSPs.
and better internal controls.
Absolutely. Mandated conflict policies, dedicated and independent compliance roles like the MLRO. It's a much more robust framework. It feels like they're saying, if you want to operate here, you need to be serious, well-resourced, and properly governed.
It really does seem like a fundamental shift, not just tweaking around the edges. And this focus on substance seems to extend to dealing with firms that aren't really active, right?
Yeah.
You mentioned something about striking off branches.
Yes, that's Rule 7A in the new rules. It gives the RA explicit power to strike off a branch registration if the branch is non-operational and fails to respond to inquiries from the registrar within just 14 days.
14 days, that's a quick trigger.
It is. It shows they're serious about clearing out inactive entities or those not engaging with the regulator. No more sitting dormant indefinitely.
And does the responsibility end once a branch is struck off?
Not entirely. The rules also mandate that the accounting records for any branch struck off under this rule must still be preserved for 5 years after the strike-off date.
So even defunct entities leave a trail. Accountability persists.
Precisely. It ensures there's always a look-back capability, which reinforces market integrity long-term.
It really feels like the ADGM is building an ecosystem where, as you said, being well-resourced, accountable, and having genuine substance are the price of entry and continued operation.
I think that sums it up well. The era of maybe lower cost, potentially higher risk providers, at least in these key professional services, that seems to be ending in the ADGM.
Which leads to a final thought for you, the listener, to consider. We've seen this strong focus on physical presence and senior staffing for lawyers and stricter controls elsewhere. So the question is, could this be the start of a trend? Might the next wave of ADGM regulations look at imposing minimum operational resources or active physical presence requirements across all types of controlled activities, not just legal and tax?
That's an interesting question. Could we see a general policy ensuring all licensees are more than just a virtual office or a nameplate?
It's definitely something to watch as this major financial center continues to evolve and solidify its global standing. Something to mull over.
Indeed. Well, thank you for joining us for this deep dive into the ADGM's enhanced regulatory framework.
We hope this breakdown helps you navigate these important changes. Until next time on the Riffle.